Wherever you are around the world and in the United States, please join the conversation. Give me a call at 561-228-1921. We discuss issues around the world that includes love, sex, and life in general. So join me Monday through Friday, 561-228-1921. That's 561-228-1921. Good morning, everyone, and how are you today? We thank you so much for joining us from around the world and in the United States, because this is the Diana Wright Show Live, and we thank you because, I'm just kind of wondering, as I say good morning to you and I welcome you from around the world, I wonder if you're thinking today, do you feel used by your friends, by a significant other, by your spouse, by your kids even, because some children actually use their parents when they want money or when they want a favor or when they want something. So do you actually feel used today? Or is it something that you actually think about or wonder about or feel down about or depressed about or, not feeling so great within yourself about it, that you've been used and abused and then dumped by your spouse, by your friends, by your children, your significant other? Isn't that a bad feeling to have? It really is a bad feeling to have. So why does it seem to happen to each and every one of us at some point in our lives? I just believe it's a lack of love in our hearts for ourselves, as I profess and ask you please every single day to consider loving yourself. I love me. 3 little words, magic. And they will get you to where you want to go. Because when you feel used and misused by others, then you just kind of look inside yourself and say, God loves me and I love me. But I want you to pick up your Bibles today when you get a chance. You don't have to pick up your Bible, just go to your cell phone because we all have them. 1 Corinthians 13. And it truly tells you what love is. If you have an NIV Bible or one of those other Bibles, it breaks it down much more simple than the King James. It talks about love being kind, love not being boastful, love being tender. Love being not storing things up and throwing it back at your partner. Love being is kind of, just be thoughtful. How many of us actually think about that every single day? Until it affects us, it makes us depressed and take us down into a funk. And then we have to just simply rebuke the devil, put him behind us, get up, brush off, and move on again. How many of us do that? Okay, well, I think we're supposed to have a guest this morning, but let's see if this is she. Hello, how are you, Miss Davis?
Hi, good morning.
How you doing?
I'm doing great.
Okay, well, I wasn't sure because I didn't hear back from you, but I'm so happy to hear your voice.
You know what happens? I don't always get on Facebook, and sometimes, like yesterday I was busy, And so I got up there this morning and I saw your message and I'm like, oh.
Okay, all right. Well, it's wonderful to have you, and I'm so blessed to have you because it's tax season. And, first of all, just tell me a little bit about Jeanette Davis, CPA. Tell me who you are and tell me what you do so I can then extract from you what I need for my audience.
Okay, well, as you know, I'm Janet Davis. I've been a CPA for 20 years.
Wow.
Prior to that, I've held several positions in corporate America. I've been a senior banking executive in Florida for quite some time. Today I work with small business, non-profits, churches, individuals in the areas of accounting, tax planning, tax preparation, tax problem resolution, financial planning, and retirement planning.
Wow. Okay, so you cover the entire gamut.
Pretty much.
Okay, tell me what's the difference, before we go on, what's the difference between a CPA and an accountant? Because, you find yourself trying to explain it a lot to people, and I would love to hear it from you, the expert.
Yes, as an accountant is someone who tends to go to school. They'll probably get a bachelor's or not, and they've worked in a firm for a while and gained some experience, and so they practice as an accountant.
Okay.
As a CPA in Florida, we hold bachelor's, an MBA, and we have a specific, very grueling exam, which consists of 4 parts in the various areas of accounting, taxation, law, auditing.
Wow.
And so once we've completed that, then we're required every 2 years to complete 80 credits of continuing education to maintain our license. So that's kind of what sets us apart, because we have no choice. We have to keep current, we have to know the laws, and we have to know what's going on.
Okay. All right. So, and you have that thing that I truly hate. You have to go back every 2 years and refresh your mind.
Yes, 80 credits.
Oh my goodness. Wow. That's a lot. Okay. So let's talk a little bit about the tax season, because, people start getting their taxes ready. When is really the time that your company is supposed to send you that information that you need to file your taxes?
Okay, here's the thing. Company should get their tax information in by January, but depending on the company and the size, you should be talking to your CPA or your accountant from at least December, by November, so that you can plan to take advantages of anything that's in the tax laws that you can for that current year. Because after December 31st, you really can't make changes. It's what it is at that point.
Okay.
So the best thing for a company to do is they should get with, if they have not been working with someone throughout the year, they should get with someone by, say, November. That way their stuff can be assessed, looked at, and they're given the guidance as to, okay, you may do this or you may do that in order to minimize your tax situation.
Okay.
Legally minimize your tax situation.
How dangerous is it for you to be doing your own taxes? Because, when I watch television, I see so many ads from all these like H&R Block saying, oh, you left all of this on the table and you could have gotten this and you could have gotten that. Is it prudent to be doing your own taxes with TurboTax or any one of those other things available?
I would say it depends on if you have a very simple return with nothing on it besides your W-2, and you have nothing to claim, then yes, you can do your own taxes.
Okay.
But if you have anything that you can possibly claim, especially with regards to the Schedule A, or if you have per se, for example, someone who has a business, they should definitely work with someone who is trained in the tax laws. The fact that every year, I mean, I attend a 3-day IRS seminar every year, and they're not doing that. They don't know what it is that they can and cannot do.
Right.
They're just relying on the software to plug in the number and guide them.
Okay.
While we can look at their situation, look at it and says, okay, you can do this, and this will, make a difference here, or if you do that, it will make a difference there.
Okay, so you're advising then that if someone has a business, it's better to hire someone as opposed to trying to do the job yourself.
Yes, definitely. Okay. And even the individual person who has a lot of things that they can claim, they should work with a professional.
What are some of the things, when you talk about claim, what are some of the things you can claim? Because, a lot of people are doing businesses from their house. Can you claim the office space? Can you claim the equipment?
Well, yes, if you've established a business and in your home you have a dedicated space that's allotted to the business, let's say you have a room in the house where you have your computers, your desk, and everything where you work from, you can legitimately claim the home office deduction expense. If you bought equipment for your business, yes, there are different write-offs that you can take on that equipment.
Right.
Say, for example, you bought a piece of equipment, you could take 50% write-off sometimes in the first year, and then depending on the equipment, the rest could be depreciated over the next 6 years.
Okay.
So, then that's what I'm saying, that the person who is doing their taxes on their own, they won't know all these things.
All right. So it's always better to get some expert advice.
Yes. If you are dealing with a Schedule C, which can sometimes be complicated, I see a lot of people put stuff on the Schedule C, which opens them up to audit because they're not deductible expenses.
Right.
And even some of the people that they go to prepare the returns who are not professionals, they tell them, like, for example, you can claim your dry cleaning. Dry cleaning can only be claimed for people who use uniforms, genuine uniforms. Or wearing your regular clothes that you can wear anywhere, you can't claim dry cleaning for that. Okay. So those are some of the things that we come across that gets people into trouble.
Okay, you just spoke about auditing, and just let me remind folks that this is the Diana Wright Show Live. We're talking to our special guest this morning, Jeanette Davis. She is a CPA, and she's giving you some advice that I think most of us need this time of year. Okay, let's talk about the red flags that will get you audited. What are some of the things that you need to not be doing?
Well, the mileage. Many people claim mileage, but they don't maintain a mileage log.
Okay, so you have to be writing down every time you drive to work and back how many miles.
From X point to the next point. Now, your regular job, if you're a W-2 employee, does not count as mileage. That's commuting miles.
Okay.
Mileage is when you go to visit a client for business, or you go out and do something business-wise. Just driving to work, it's not mileage.
Wow. So all this time when people believe that if you're driving to work and back, you can log those miles and put them up and claim them, that is totally wrong?
Yes, that is completely wrong.
Wow. Okay, thank you for telling us that. What else are some of the things that we need to make sure? So mileage is one of the big ones. Well, that's a new one for me because I always heard, when I used to be a mortgage broker, I was told get a log and write down all these miles to drive back and forth to work. I didn't know it's exclusive to going to visit a client.
It's for business expenses.
Wow. All right. So mileage, one. Let's hear some other ones that you can just give us a tip on.
Right. I look on the form and I see repairs and maintenance.
Repairs and maintenance. Okay.
Yes. And sometimes I see some huge numbers in there. When you ask, what is that for? Oh, I repaired the car. Now, all that comes in the mileage area. It is not separate by itself.
Oh. Okay. So I don't get a separate credit for repairing my car after I'm using this car to go to work and back?
You either get the standard mileage or an actual. Wow. Based on the miles that you drove on your car. Say, for example, you drove 1,000 miles in total on your car, and say 500 of that was business miles.
Right.
And the rest was between commuting and other mileage. You can only claim 50% of your expenses on the vehicle.
Mm-hmm.
because only 50% was business miles.
Right. Wow. Okay.
Right? And so any repairs or maintenance, if you have a choice of doing standard or actual,
Mm-hmm.
but your actual is also going to be 50% of whatever you spent on the car.
Ah. Ouch. Well, I don't know. It seems like a lot of people are confused about that then, because I, for one, thought that was what it was, that you could claim those. That's what I was told anyway, and you had to keep. I found it quite cumbersome because I don't like to be writing down every little thing that I do. So now it's basically a waste of time. It's when you're visiting a client or the repairs come in the same vein as that whole mileage thing.
Right.
Okay. All right. Okay. Anything else we should know? Because you are giving us a good schooling today.
I'll give you a scenario that I saw recently, which just blew my mind. A preparer put on a Schedule A rent for a customer.
Rent for a customer?
Yes.
Okay, that sounds questionable. Before I even ask any questions, that sounds questionable.
Yes, and this was done by a preparer, someone who did not know that this was not allowed.
Okay.
So things like that people have to be careful of. Some people take the rent and they put it on the Schedule C.
Mm-hmm.
That's a big red flag.
Wow. Okay. So rent is not allowed to go into Schedule C. Is there any other time that you can put that rent on Schedule C though?
If you rent in space for your business, that's legitimate.
Okay.
Right? But if you're not renting space for your business and you're just using house rent, then that's not legitimate.
Okay, so how do you recover then if you're using an exclusive room in your house, for example, for your office? How does that work?
Called home office deduction is what you deal with.
Okay, so you go with home office deduction as opposed to saying you're paying rent, so you then write off your whole rent or your whole mortgage.
No, you can't write off your whole mortgage nor your whole rent. It's a percentage based on the square footage of the space you occupy.
Ah, okay. All right, so this is really complex. Okay. All right, let's talk about taxes for a minute. Just, regular person filing their taxes. When is the best time to complete your returns and get them into the IRS? When is the best time in your estimation?
Your returns are due for an individual, it's due by April 15th.
Right.
For business, it's due March 15th.
Okay.
You can get an extension if you are not able to complete it by April 15th or March 15th, but you must file for the extension.
Okay. All right. A lot of people tell me, I'm going to file my taxes early because I want to get my refund early. How does that actually work, or is it just a fantasy?
Whenever the tax season is opened by the IRS for filing, but like this year it was January 31st,
right?
You can start filing at that point. And it's taken about, this year I've seen it's about 10 days that it's taken for the refunds to be processed.
Okay, so if your information is in on the 30th, then you can kind of expect your refund.
10 business days.
10 business days. Okay, 10 days. All right, that sounds reasonable. So that is actually a fact then. The earlier you file is the sooner you get your refund.
Right, that's true.
Okay, all right. What are some of the things that we must keep in mind to prevent an audit, if you will? Just keeping in mind in general terms.
Well, make sure that you're actually filing what you have the backup and the proof of whatever it is that you're claiming, and that what you're claiming is actually legitimate for you to claim. Like, for example, education expenses. A lot of people now are getting letters from the IRS demanding back the money that they got for the education credit.
Wow.
Which they were not entitled to.
Why is that?
Right? Because they were not in school, or they claim, if you've completed a 4-year course and have claimed, say for example, the American Opportunity Credit, you're not entitled to claim it to do a master's. There are other credits that you can claim. So you have to make sure you're actually claiming the right credit. In order to claim student loan expenses, you must 1098-T from the school.
Mm.
You can't just, it's no longer like in the past, wherein you just put on the form, oh, I paid this much for school, or I paid that much for school. Now the IRS has gotten hip. They have to get a 1098-T, which the school files with the IRS as well.
Mm-hmm.
When you put your return in, it's matched up, and if it matches up, then you're okay.
Okay. All right. So that sound to me like you used to be able to get away with certain things, but you're not able to get away with certain things.
It wasn't legal, but people got away with it because up until maybe 2 years ago, IRS did not have a tickler in the system to teach them as often as they are now. But a lot of people are finding after 2 years, they're now being hit with the bill for money that they received, and even some that they didn't receive, because sometimes they pay out a high price to do the return. So they now have to cover everything, because the preparer sometimes is nowhere to be found.
Ah, okay.
And the one thing that everybody should know is that the IRS does not look at the preparer as the person. They look at you as being liable for your return. So when you sign a return, or you give the person, the automatic signage to upload that return for you, the IRS, you are actually liable for everything that's on that return. So frequently I hear people tell me, oh, I go to do my taxes, and I just sit there and they do whatever. And I say to them, is the return explained to you after they finish? Oh, no, we just sign. I'm like, but that's your liability.
Oh, well, you see, I'm glad you brought that up, though, because a lot of people believe that when you have an accountant or a CPA do your taxes, they're the ones that the IRS is going to come after.
Well, the professionals, have a lot to worry about because they have a license to protect.
Right.
That can be yanked. People who don't have a license don't care.
Ah, okay, got you. All right. This is very interesting, and I'm so happy I have you on. But I know you're very busy, but I'm gonna try to ask you to come on in another month or so when it's getting closer, because I think a lot of people are under some misguided information about the whole tax thing. Let's talk a little bit about the IRS, because a lot of people are afraid of the IRS, afraid to call them, to speak with them. Give us some advice on that note.
Well, you shouldn't be afraid to call them.
Yeah, a lot of people are scared, of the IRS.
Like everybody else. The only thing that I would suggest to you is that if you have an issue and it's a technical issue and you don't know all the rules, then you should get a professional to represent you.
Ah, okay. So if I do have a question or a problem with the IRS, are you, as a CPA, a person that I can call to then take over the case for me, and I don't need to call myself, or you can then call for me?
Yes, typically if a client retains me to handle an issue for them, then we have them sign a power of attorney for us to deal directly with the IRS, so they're not in the middle of dealing with them.
Okay, so the stress is off the person now and on to you, the CPA.
Right.
Okay.
Yes.
All right. My special guest inside the Diana Wright Show live this morning is Jeanette Davis. She is a CPA. Tell me where you're located and how people can get in touch with you.
1745 North University Drive in Pembroke Pines.
Oh, you're in Pembroke Pines.
954-967-0584.
Okay, you want to repeat the number for me again?
954-967-0584. Or I can be found on the web at www.jdaviscpa.com.
Is it, did you say DJ Davis?
No, J Davis.
Oh, J Davis. That's what I thought you said, but I wasn't sure.
jdaviscpa.com.
CPA.com. All right, so she can be found on the web, and she's in Pembroke Pines for those of you who live in that area. And maybe, just maybe, because of her expertise, you want to drive wherever you are from to get there.
I have clients that drive from up in Palm Beach to come and see me.
Exactly. So
I have clients in Sarasota. I have clients in New York.
Wow. Okay. All right.
So it's not, just South Florida clients that I deal with.
Okay, so you are indeed available to people just about anywhere in the U.S.
Mm-hmm.
Oh, okay. All right, a lot of people that I deal with only deal with clients here, so I'm happy to hear that. So if you're watching and you need a CPA to sort out your taxes, because I can't stress enough for people not to wait for the last minute. Some people, I see them scrambling at the post office, at midnight.
And there's not even a reason to go to the post office anymore to do your taxes, because unless it's an amendment, we tend to, electronically file returns.
Okay, so you don't have to line up in the post office
anymore. No.
That's good news, I think, for a lot of people. But for those who don't use the computer, though, they still have to go to the line, right?
Yeah.
Okay. All right. So that's the reason you're so accessible then, because if anyone is calling you from New York, Connecticut, or wherever, you get the information by phone, and I'm sure you probably use Skype too, right?
Yes, I do.
Okay, so she uses Skype. Next time she comes on, I'm going to make her on Skype so you could actually see her. Okay. So they can get you by Skype or on the internet, and of course you just gave us your telephone number, which is 954-967-0584, and she's located in Pembroke Pines at 1745 North University Drive, and of course on the web, which is taking over the world, right. www.jdaviscpa.com. All right, so as I just mentioned before, is there a disadvantage majorly of waiting till the last minute to actually file? Because a lot of people are procrastinators, so they'll wait. It's April 15 and they're filing on April 12.
Well, this is not really a disadvantage because, if you're entitled to money, you're going to get your money back.
Okay.
The only problem that you face is that when you rush to do things, sometimes you forget things and you miss things.
Okay. All right. What are some of the things that we could really be leaving on the table in terms of refund? Because I see the ads and I just wonder how many people are actually leaving all that money on the table as they make us believe when it's tax season. How much can we really be leaving on the table?
Well, sometimes some people leave stuff on the table just by virtue of they don't know how to use the software they're using properly.
Okay.
I wouldn't say that. For example, say someone may have sold a property or something like that. You could leave stuff on the table because of the fact that you don't know how to do a net operating loss, or you don't know how to carry forward things from one return to another. You haven't claimed your education expenses. You haven't claimed one may qualify for the EIC and they haven't claimed it, as they earned the income credit and they haven't claimed it. So there's various things that you could leave off a return that could potentially generate a refund for you. And the other thing that a lot of people do not do properly is if you have itemized deductions, I find that the taxes, the sales tax that is given back, especially for people in Florida, is not done properly. And so they're usually leaving some money on the table in that area.
Okay. I want to talk a little bit about older people, because are you supposed to be filing after you're retired and you're only getting Social Security benefits and your pension and that kind of thing? Or because I find a lot of
what your pension is. If you're just getting Social Security, sometimes the income is not taxable that you get. But if you have pensions with it, that could be taxable.
Okay. So the pension is what probably creates.
It depends on the amount of the income, where the income, rolls out to be. That determines whether or not there's taxes due.
All right. I wanted to ask you something.
For people like someone getting maybe 10, 14,000 in Social Security, they're not going to end up with taxes.
Okay. All right.
That's all the income they have.
If someone is earning just what's the ceiling now that you must file your income tax? Because I remember when I used to go to school, it used to be like $2,500. Is it still the same, or has it gone up or decreased? Or?
It has gone up. The only person that who must file a return in 2013 if you're single and under age 65 and you have gross income of at least $10,000.
10,000?
Yeah, 65 or older, 11,500.
65 or older is 1,100?
11,500.
11,500. Okay.
Right. If you're married, filing jointly under 65 and both spouses have income of at least $20,000.
Okay, so if you are a single person or you're just a teenager going to school or whatever, how much are you allowed to earn before you have to file taxes?
Well, it's $10,000. However,
so it went up from 20.
Even though the threshold is higher, they should file, because if they have taxes in, they may be entitled to a refund.
Okay,
because
I see.
You have students who go out and they earn their little money and they pay taxes.
Right.
But 9 out of 10 times when they file, they'll get back most of it in a refund.
Oh, I see what you mean.
Right. So it even though it says at least $10,000, but it's still incumbent on them to. It makes sense for them to file because they may end up getting back that money.
Okay, wow. Thank you for that. I didn't know that. So,
and the other thing is if you're over 25
yes,
and you're only making, say, $7,000 or $8,000 or whatever, you're going to get some earned income credit money.
Okay. So don't be thinking, because, you know, when I went to school and, you know, I worked part-time or whatever, they used to say, oh, you only work less than $2,500. You don't have to file taxes. But now you're telling me that when you file, you might just be getting that money back.
Right.
Okay. All right. So everybody needs to file. You don't want the IRS to keep any of your money.
Exactly.
Yeah. Okay. I want to talk a little bit about when you are a independent contractor. How does that really?
$600.
Okay. $600 is the maximum that you earn.
Is the amount that you have to file.
Okay. So when you're an independent contractor.
So everybody who pays someone is required to give a 1099 if it's $600 or over.
Okay, so if you're working independently and you're getting a 1099, is that what it is? That means $600 is, if you get more than that, you must file. Okay.
Right.
All right, so we got that. And single people, $10,000. Well, I didn't know that one. So I think that's good news for a lot of people who are listening who probably, you know, trying to figure out how to file their taxes using TurboTax or one of those other things. And okay, the little person that's listening that is earning $10,000, they definitely don't need to call you. Is that what I'm deciphering?
No, because it doesn't. Well, if they can do it themselves, they really can go on and do one of the free file stuff and get that.
Okay, so if I'm a business, I need to call Jeanette Davis, the CPA.
Or if you're an individual who is employed and you have, you're making decent income. And you
what is decent income? Slow down there, please. What do you call it? Are you talking about $50,000, $100,000? What number are we talking about?
No. We do taxes for people who make $30,000.
Okay.
$35,000.
Okay.
You know.
All right. Okay. I just want to get that straight. Because
each person is different.
Okay, all right. So if you're making $30,000 or more, you might just need Jeanette Davis to help you sort out your taxes and make sure you're not leaving any money on the table, or you're not doing anything that will raise a red flag so you get audited. I want to ask you one more question before you go, because I know you're a busy lady. When someone has an accident or get some money from some source, how does that really work with the IRS?
Well, there's some insurance claims that are not taxable.
No, the reason I'm asking you this is because I know of someone who she had an accident. She also sold her house and she bought another house cash, but she got audited. And this is an elderly lady who was totally panicked when she got audited because she was trying to figure out, what did I do wrong? So, and that's the reason I'm asking you the question. I know she had an accident and she probably got a little money, but I know she also sold her house and then she used that money to buy another house cash. But when she got audited, it was like panic overload.
I can understand that.
Yeah.
The moment some people hear the IRS, they go into with clients who they just absolutely go into a frenzy the moment they hear
Absolutely
something. Right. And sometimes it's not necessarily that they have not done anything wrong.
Right.
But just maybe the way the return was filed, it raised a red flag.
Okay.
And so, based on that, she was selected for audit.
Okay.
One of the things that most people do not know is that the IRS tends to compare your returns over a 3-year period.
Oh, over a 3-year period. Okay,
right.
People,
and
be careful what you're filing there. So they look at 3 years of filing and see if it's similar. If it's kind of, all the way out there 1 year, then you're setting up yourself for an audit.
Yes. Okay. And the other thing, too, in her case, if she was single, she would have been, and it was her primary residence.
Yeah, she is single.
$250,000 of that money was exempted from taxes.
Oh.
But if she made a gain of more than $250,000, then she was due to pay tax on whatever amount that was over the $250,000.
Okay. Now that you mentioned the 3 years, you see, the more things you mention, the more I keep you. Okay. You mentioned the 3 years of the IRS kind of looking over your returns. But, okay, I'm earning $10,000 this year, and next year, all of a sudden, I'm lucky and I'm earning $100,000. Does that put me in trouble for an audit?
No.
Okay.
No.
Okay.
It's typical of the expenses that you claim. You're in trouble.
Okay. It's not the income per se.
No.
Okay. All right.
The expenses you're claiming.
Okay. So your expenses is what throws you. Should you just be kind of saying, okay, look, I don't want to be bothered with the IRS, so just leave off these expenses and just go with my salary and that's it?
Then you go with your salary. You're paying much more taxes than you're supposed to.
Okay, all right. So you kind of have to just wait. No, I'm serious. The IRS, when you hear the politicians talk about it, they hate it so much because it's such. Everybody's scared of the IRS, it seems, and it seems like
it doesn't respect them.
Yes,
tax laws do not respect them.
Right, it seems like such an invasive agency, that people are so scared of. And when you hear IRS and they're coming to audit you, you're like, oh my God, your blood pressure goes up, you can't eat, you can't sleep, And I just feel bad for people, and that's one of the reasons I kind of persisted in seeking you out, because I wanted to say to people, yes, this is tax season, but there are people out there who actually will honestly help you to do this and not try to rip you off or whatever, because that's another problem. A lot of people believe that they're ripped off by their accountants and their CPAs or their whatever. How do you deal with stuff like that, though?
If it's a CPA, you can always report them to the state.
Okay.
Right? The CPA is, it's administered by the state of Florida.
Right.
So you can always report a CPA to the Board of Accountancy if they rip you off or they do something that's untoward. But typically for the people who have no license, and if it's an enrolled agent, you can report them directly to the IRS.
Okay.
But for just a regular accountant, you don't have anybody to report them to.
Oh, that's the key. Okay, so there's the difference. Okay, so there's a difference between if you have your taxes done by an accountant, a CPA, or you use one of those people like H&R Block or one of those people.
Well, enrolled agents are they're approved by the IRS to do taxes.
Right.
So if you have an issue with an enrolled agent, you can go directly to the IRS on them.
Okay.
If you have an issue with a CPA, you can go to the Board of Accountancy. If you have an issue with an accountant, there's nobody to go to.
Okay,
or a regular tax preparer, there's nobody to go to.
Alrighty, so then now you are told you should either do your taxes yourself, get a CPA, or one of those people that are actually authorized to do taxes. Am I saying it correctly?
Yes.
Yes, okay. Alright, well, let me give you final thoughts before you go, and I thank you so much for coming because I really enjoyed this information, and I think a lot of people, because you know what I do, after I finish the program each day, what I do is I put it on my website, and then I also post it on Facebook just in case there's someone out there that we can actually help. All right.
Okay.
So, yeah, so that's what we'll do with this particular. I don't put up all my shows. I just put up the ones that I think people really need the information. So this today, I think, is really crucial for a lot of people. And don't forget, you don't have to live in Florida to contact Jeanette Davis. You can live anywhere in the U.S. and she'll be able to do your taxes for you, because we live in the age of electronic. Oh my goodness. I mean, I feel like the computer is taking over my world.
Yeah.
Seriously. So I'll give you my, just time to say whatever you want to say, final thoughts and reminders that you want to give to people.
Well, thank you for inviting me, and it was a pleasure speaking to everyone. Please feel free to call me if you feel I can assist you in any way. Again, my number is 954-967-0584, and I'm on the web at www.jdaviscpa.com. I'm also on Facebook at www.facebook.com/jdaviscpa.
Okay, so you're one of those people who advertise on Facebook. Is that what it is?
I actually have a Facebook page.
Oh, okay, all right. So you do have a Facebook page. All right.
Yes, and there are articles there as well that they can read, or they can tap on my website as well, and they can get articles that we send out monthly that benefits the individual or the business person. We try to time the articles according to what's going on in the tax world. So even if they don't come to do business with me, but they can actually sign up in those places to get the material that will benefit them.
Oh, great. Before you go, is there anything that we need to know that was changed in the laws with the IRS that people need to be aware of before you actually go?
Well, for this year, it's more probably mainly the business folks, because like before they were able to get for equipment financing. Up to last year, you could write off 100%. This year, you can only do 50% write-offs.
Oh, okay.
In the first year. And then you have, let me see if I remember what else was discontinued. Because there are a few things that were discontinued. And
also, while Jeanette is looking that up, I want to remind you that I'm going to try to get her back. She's very busy and hard to pin down. Try to get her back in another month or so before tax season, so she can actually remind you guys, because it's February already, and then there's March.
Before I go ahead. We just say this. Head of household. I see a lot of married folks that are filing head of household while they're married. Oh, it is illegal.
What does that mean, head of household, anyway?
Okay, head of household means that they're married, but they take one party takes the child and files head of household in order to get the earned income credit.
Oh.
Then the other party files single. That's illegal.
Okay, so what is the correct way to do this?
If you're married, the head of household is you're considered married. Considered unmarried, or you're single. Considered unmarried by the IRS means that you've lived apart from your spouse for the last 6 months of the year.
Oh, okay.
Right? And then you can file head of household.
Okay, so you have to be...
But if you're still living in the same house and with your spouse, you're not supposed to be filing head of household.
Ah, so you have to be separated for a minimum 6 months.
Yes.
And that child has to be with you.
Yes.
In your dwelling.
Yes.
Okay, so for all the tricksters out there, that is not working.
Don't say you didn't know. And that's something that they're very big on right now, that they're looking at.
Okay, so beware, folks. If you're planning to do that, please do not do that. You have to be separated from your spouse for 6 months minimum with that child in order to claim head of household. Okay, my goodness, you have certainly taught me plenty. I feel like I don't want you to go. Yeah, seriously.
It was nice talking to you.
Yeah.
It's a pleasure. And yes, I'll be happy to come back.
All right, and please let me know when it's convenient for you to come back, because I know you are really hard to pin down. So, It was really nice having you, and I learned so much for myself, and I hope we actually gave people information that they can use and see and apply. Especially the last one that you just told, because I know of that plenty. Yes, I do know of a lot of people who do that, but I really did not know that you have to be separated for 6 months.
Yes.
So what happened?
Separated for at least 6 months.
But then, Jeanette, what happened to all those people who are divorced and living in the same house because they can't afford to go find another house? How does that work?
Well, I'm going to give you an example of someone that came to me recently. Guess she was divorced. Well, no, they weren't married.
Right.
But the other party lives in the house.
So they were doing a common law thing.
Right.
Okay.
The other party lives in the house, and when she went to claim for a head of household, she was denied because the bills were being paid by the other party.
Wow.
So even though she technically was responsible for the kid, the IRS denied the claim because she was not the one paying the household bills.
Paying the bills. Wow. Okay. My goodness. There is so much in this whole IRS debacle that people really and truly need to know, because that is an interesting one. So if you're common law, living together, you cannot claim head of household if your significant other, shall we call them, is paying the bills. And those checks are, but if you were paying the bills though, that would be allowed.
Yes.
Okay. Even though you're living under the same roof. Okay. Wow. Anything else? Because every time I think we're ending.
I have to run now, though.
I know you have to go. I know, and she's overstayed her time actually, because I know she's busy. But thank you so much for joining us. We really learned a lot today, and I hope, just let me know when you can join us again. I'd certainly appreciate it.
Okay, I'll look at my calendar and I'll drop you a line.
Okay, thank you so much, Jeanette. Okay, alrighty. Take care.
Bye-bye.
That was my special guest inside the Diana Wright Show this morning, Jeanette Davis. She is a CPA, and my goodness, she certainly gave us some great information. If you'd like to give her a call, her number 954-967-0584. You can find her on the web at www.jdavis.cpa.com. All right, and of course she's on Facebook, and she's located in Pembroke Pines, but that does not stop anything, because she can file your taxes no matter where you are in the United States. It's 1745 North University Drive, and that's in Pembroke Pines. Jeanette Davis, CPA. What a pleasure to have her on this morning. And I kind of kept her over, because every time I try to, stop the conversation, she was giving me better information that I know a lot of you who are watching me right now, who will see the show on my website or on Facebook, and we will be able to give you some information that you just didn't know. So thank you so much for going through that. I know it's tedious, you all want to hear about politics and all those other things, but it's tax season, so I'm going to try to have Jeanette Davis back to talk about taxes and some other things, because she also does a whole lot of other genre of things, but we focused on the taxes today because April 15 is just around the corner. And my goodness, I actually learned that if you're single, you have $10,000 up to where you need to file your taxes. And then you might just be, even though you're allowed to earn $10,000 and below and not file, you should still file, because you might just be getting that money back from the IRS. Isn't that wonderful news? If you're an independent contractor, it's $600. And just in case you think you don't want to file, you might just be getting that money back too. So don't be discouraged. File your taxes. April 15th is just around the corner. Thanks again for joining me inside the Diana Wright Show. We are live, and we do this. Tomorrow we're going to have Dax Dunn here with us. We're having some technical difficulties with our outgoing signal, but just ignore that and try to extract the information that is absolutely good for you. I just wanted to switch gears now from taxes and talk a little bit about the wealthy in this country that seem to be totally annoyed with the poor. And I wonder why, because I don't think there's good reason for that, because I never thought, or I never got the idea that poor people were hating on rich people. I got the impression that poor people simply want to make a living wage for themselves. Even though they're at the bottom, it is so unfair for the top executive to be earning $20 million when the person at the bottom is earning $7.50 or $7.25 an hour. And we are simply asking for $10.10, and if you calculate it based on inflation, it would be like $22 a month, an hour, that someone would need to earn to keep up with inflation. So I am here, and I'm really asking the wealthy to not think that way. You know, the head of AOL, he actually, in trying to talk about how he's going to change the benefits in his 401ks and whatever, he insulted two parents, two families in his company, because he mentioned and talked about them in terms of the fact that they had to spend millions taking care of their sick babies. And yes, the babies were saved, and I'm sure the employees affected appreciated what the company did. But they don't want to let everyone know that the company did this for them, because they consider the fact that they're working as employees for that company. I wonder if we have all executives at the top working in companies, no little people, what would happen to those companies? So I really and truly want rich people to not think that people are begrudging your money or hating on you. It's not about that. It's about people working 40 hours a week and still not able to earn a living wage. And what is a living wage? A living wage is something that you get that is able to pay your rent, buy food, and take care of your children. And even though I'm one of those proponents who don't want women to go out and have 10 babies that they can't afford, or even one that they can't afford, if they do have them, we don't want their children to be starving, because those children are not at fault for what the parents did to get them here. We just need to get our young women and women in general to close their legs and not have sex if they don't want to have babies without protection. Simple. Yeah, we hear people say, oh, the condom broke, or this didn't work right, or I didn't take my pills in the right track. But it's our responsibility to take care of that. The children are not responsible for being here. So we don't want them to starve. That's simply what I think most people who are not earning a living wage is saying to rich people. I don't hear many poor people out there saying, oh, I hate the fact that they're earning $20 million and I'm earning nothing. What they want is what they think they have earned in helping a company move forward, produce their goods, stay afloat. And when you think of the executive from, Nicole Miller, that truly offended me when he said, he's a co-founder of Nicole Miller, and he says, poor people should stop complaining, because if you're earning $30,000 a year in the United States, that is a wealthy person in India. Well, let me inform you, Mr. Co-founder executive. We don't live in India. We live in the United States of America, where everyone is entitled to earn a living wage if they're willing to get up off their butts and work. So the fact that $30,000 is making you a millionaire in India, it doesn't matter in the United States, because you don't live in India. And he then believes that you should stop complaining? Oh my golly, what happens to our hearts? Do we all of a sudden, when we become wealthy and rich, forget about poor people? And we do believe, I heard some other ones saying that poor people need to work harder. Poor people are lazy. Do we truly believe that? Some of those single mothers who are out there working 2 and 3 jobs, yes, I blame them for having all them kids that they know they can't afford. But my golly, it's not the kids' fault. So why do we keep doing this? Work harder. Stop complaining. Is it fair for someone to be making $7.25 an hour? What can you truly do with that if you work 40 hours a week? And say you have 2 of those jobs, so you're working 80 hours a week, and then you have no time to be with your family. How do we equate that? How do we work that out? And how do we go to our beds every night and feel confident that we have done our best and we've helped someone pull their bootstraps up? You look at, when you watch the TV show Undercover Boss, and you see the executives go and do the menial jobs that the little people do. 99.99% of the time, that executive is unable to do the job of the little people. And when they do it, or if and when they try to do it, they are exhausted. Just watch that show again and you'll see. Those employees most of the times are helpful and totally not disgruntled, not begrudging anyone of their wealth. They're simply happy. Do you know there are lots of poor people out there who are just happy in their own skin where they are, just to have their family around them? Just look at people in Cambodia. They're living on those riverboats and the water is contaminated. They cook with it, they eat that food, but they have 5 and 4 children, and I'm going, why are you having all those children when I'm watching the show? Because I believe if you are having children and bringing them into the world, you should have a way of taking care of them to the best of your ability. And for the women who have their children, resent the children because they're trying to chase that love of their life in the name of a man, kudos, bad thing to you. Why are you doing that? Having a man should not be how you consider your self-worth, who you are. Loving yourself should be your first order every single day you wake up. And if you want to know what love truly is, I'm going to repeat it again. 1 Corinthians 13 in the Bible. And if you have an NIV Bible, it breaks it down into simple language. The King James Version kind of give you the complicated version, the more intellectual version. But NIV, it's just right there. Easy to digest, easy to see, and easy to comprehend what love is. And I wish wives and husbands, significant others, should and must read that. Parents, children themselves. Because it's easy to learn to love when you're younger. You know, when you're setting your ways and you go, oh, that's not going so well for me, so why do I want to love anyway? So please, I ask you to take that scripture, study it, digest it, feel it, meditate on it. It will make you a better person. There are lots of other things that I wanted to talk about today, like the fact that Chris Christie's web is getting wider. Even now we have the Port Authority police getting involved. how do they get involved in a political vendetta? How does that happen? America, we need to be watching ourselves. And all the bad weather and the terrible winter that we're complaining about, maybe we really need to look into climate change. Aren't you curious that Atlanta, Georgia, that used to be warm, just getting cold enough, is now having snow that brings the city to its knees and the state to its knees? North Carolina, South Carolina. Aren't you curious why we're having all this snow around the country? People can barely pull themselves out of one snowstorm and the next one is at their step. So all the naysayers, maybe we truly should look at the urgency of climate change. I remind you again that April 30th is International I Love Me Day, declared so by the Diana Wright Show and our I Love Me Crusade. Because just the way you dress up for Valentine's and you keep parties for Valentine's and you celebrate the Valentines, I would like you to celebrate yourself on April 30th. And if you love something, set it free. If it comes back, it's yours. If it doesn't, it was never yours. Promise me you'll look into love, 1 Corinthians 13, and you'll really read it. If you need me to talk about anything or have questions for me, Facebook is your avenue. You can message me. That's another avenue, through Facebook. And I appreciate hearing from you. We're going to have tomorrow, hopefully, Dax will join us inside the Diana Wright Show Live, and we will talk about wellness. Now we're hearing the things that athletes eat and what they said they're not going to eat or whatever. Then we're hearing that canned foods are wonderful and easy. But is it so? We'll talk about that and more with Dax tomorrow when he joins me. If it's Wednesday, it's Wellness Wednesday. Thank you so much for joining me today from around the world and in the United States. Be blessed, have a blessed week, and much love and blessings to you.